The Fed Reserve announces its rate decision today at 2 p.m. Eastern. Every financial media outlet is going to spend today telling you what the decision will be. And I'm going to save you the time right now. Rates are not moving. This is not the event. The event, the thing that is going to move your portfolio today, is something that nobody else is talking about. And it's sitting right here in the charts. The number is 90%. The other number is 88%. And this one is 86%. Those three numbers are a reading called volume compression. And when volume compression sits at 88, 90, and 86% at the same day as a major Fed announcement, what you're looking for is a loading spring. 3 loaded springs simultaneously, waiting for the same trigger. The Fed pulls the trigger at 2 p.m. Most people have no idea how to read what happens next. By the end of this video, you will. Before we go into charts, I need to give you a concept. Everything I'm about to show you will make no sense without it. So it's called volume compression, or on my chart, it's called volume comp. It measures how tightly a market is coiling before a move. Think of it like a spring. When volume quiets down and starts ranging in a progressively tighter trend or a band, energy is building and the market is deciding. The compression reading climbs from 0 to 100%. When it releases, when the decision is made, the move starts. The reading drops back towards 0 and the word changes from building or coiled to expanded. The move has started, the spring has fired. Here's why that matters today specifically. Volume comp reaches 88 to 95%. I call that a COIL reading. This is near maximum compression, and the market is holding its breath at near maximum pressure. And today we have 3 major instruments. We have the Dow, we have the Russell, we have oil. It's sitting at COIL territory simultaneously. Dow Jones has 90%, and Russell has 88%, and oil has 86%. That doesn't happen by accident. This is the market holding its breath for a specific event. And the event is the Fed announcement today at 2 p.m. The second concept you need, and I'll keep this brief, it's the AVAP. It's the volume weighted average price. This is the institutional cost basis. It's the average price at which smart money is positioning in a given instrument. When price is above AVAP, the institution is in profit and supporting the position. When price is below, they are underwater. And every bounce is a chance to distribute, to sell into retail buyers who think the dip is opportunity, and vice versa. Every sell is a chance to buy. Those are the 2 lenses. Volume compression tells you when, and VWAP tells you where. So let's apply them. Let's start with the Dow Jones. It's coiled at 90%. The VWAP deviation is minus 2.4, which means price is 2.4% below the institutional cost base for this instrument on the 4-hour chart. The VWAP, the smart money average price, is around 48,300. The level is not support, that's the ceiling. Every time the Dow bounces towards the 84.3, you're looking at the institutional distribution zone. Now, the COIL is 90% reading. The prior compression reading on the Dow, as of just days ago, was building 93%, near maximum compression inside a bearish trend. And at the time, the read was clear. This spring breaks, and when it breaks fast. So what I'm looking for today is the same energy reforming. The Dow has reloaded into coiled 90% on the day of the Fed decision. It did not break bearishly in the prior session. It recompressed. That tells me the market did not have enough of the catalyst to trigger the move, and it is saving it. It is saving it for today. Now look at the Russell 2000. This is more important to me today than the Dow. Russell 2000 is coiled 88%. Price is at 2,544 with a VWAP deviation of minus 2.3. But here's what makes the Russell the instrument I am watching first when the Fed speaks. It has a confidence score of 5 with 2 filters passed. That is the only equity index in my framework today showing multiple timeframe institutional alignment. What that means is not just one factor is pointing in the same direction. Multiple independent factors across multiple timeframes are aligned. That alignment combined with 88% compression on a historically accurate instrument. The win rate on this setup is 88%. 7 out of 8 means the Russell is the highest conviction binary setup on the equity board today. Small caps, they lead. They always have. When the Russell gives you a COIL reading with multiple time frame confluence on a Fed day, this is the instrument you watch. Whatever the Russell does in the first 15 minutes after the decision is telling you the direction of the equity complex. A dovish Fed, the Russell COIL release bullish. Price targets will be around the 2,600 zone. A hawkish Fed, the COIL releases downwards. Price breaks below 2,480 and the move is fast. And I don't know which one it will be. Nobody does. That is not the point. The point is the COIL is loaded and the signal is coming. You don't need to predict it. You need to be ready to read it. Now I want you to show something that I think is the most important macro signal in the market right now. And it is an asset most people watching this video have never traded. It's the TLT. In a normal risk-off environment, when equities are falling and investors are scared, what should happen to bonds? Prices should rise. Yields should fall. Money flies to safety. That is the playbook that has worked for 30 years. But the playbook is broken. Look at TLT. It is bearish. It has a VWAP minus deviation of 1% on this 4-hour chart. And here is the number that matters. Its composite is minus 5 out of 9. In my framework, I track composite scores across 9 macro dimensions for each instrument. We have equities. We have S&P 500. It's sitting at minus 2. The Nasdaq is minus 1. Those are bad readings. But TLT is minus 5. The bond market is more structurally impaired right now than the equity market. When equities are falling and yields are rising, that is not a recession. That is stagflation. That is the scenario central banks have no clear answer for. You cannot cut rates to save growth because inflation is rising. You cannot raise rates to kill inflation because growth is already slipping. So the Federal Reserve walks into this press conference today in exactly that environment. And the question that matters, the one the dot plot will answer, is this: how many rate cuts does the FOMC still project in 2026? So the prior projection was 2 cuts. But with crude oil at 94, still up 30% mid-February on the Strait of Hormuz disruption, with the PCI trending towards 2.7, those 2 cuts are looking increasingly optimistic. If the dot plot reduces that to 1 cut or 0, yields will spike. The TLT will break through this critical support at 87.47 and the equity COIL readings release downwards. And the 10-year yield confidence score is telling you the bond market is positioned for exactly that. 5 days ago, I flagged something on the Bitcoin chart that I want to show you right now because it directly connects to everything I've said about COIL readings. Bitcoin had a volume compression reading at 98, not coiled, but building 98%. I published a daily brief, I will link it below, and that brief on March 13 said this: volume compression is 98% building. The spring is loaded to a near maximum compression. When this releases, the magnitude would be proportional to the compression. And look at where Bitcoin is today, 74,140. It was 71,640 a few days ago. The 98% compression releases and it released bullishly. The volume compression is now 73 expanded. The spring has fired, the move has happened, and the entire crypto complex, Ethereum, Solana, Coinbase stock, has all moved with it. All of them are sitting at the strongest possible score in my framework right now. It's +3, the maximum bullish reading. Now here's the question that matters for the rest of today. Bitcoin's compression is gone, but it's expanded. The move happened before the Fed. That is significant. Bitcoin did not wait for the macro catalyst. The institution bid came in ahead of the announcement. And what does that tell you? It tells you that the smart money in the crypto complex has already made its bet on the Fed outcome. And the bet was that whatever the Fed says, Bitcoin benefits. Either the Fed is dovish and risk assets pump, which means that Bitcoin will go to 76 and higher, or the Fed is hawkish, the dollar stays strong, and Bitcoin gets repriced as a monetary asset alongside the dollar itself. Look at the V13 score today. BTC is +3, DXY is +3, USD Yen +3. Those three assets are not normally in the same bucket. Today they are. That is the Cantillon sequence telling you something about where institutional capital is flowing. The risk on Bitcoin today is a deeply hawkish Fed that compresses all risk appetite simultaneously. This is the short-term headwind, but the structural institutional bid, shown by the win rate of 100% across 13 out of 13 signals, is the setup. It's not a retail trade. This is not a pump that reverses on the Fed announcement. The AVAP support floor is at approximately 69,200. This is where the thesis gets re-evaluated. So let me be specific. Here is exactly what I'm watching at 2 p.m. Eastern today. Not vague, but actual signals. The dot plot. Before price, before anything, the dot plot. How many 2026 rate cuts does the median FOMC member project? If it stays at 2, the market read that as dovish relative to expectations. If it drops to 1 or 0, that is the hawkish shock. That is the number that matters more than the rate decision itself. Second, what's the Russell 2000 COIL? Coiled at 88% now. Confluence 5, multi-time frame. On the first 15 minutes after the announcement, which direction does price move? That is your equity regime signal. Russell leads always. Third, watch GLT versus 87.47. This is the dual key support level. A close below 87.5 after the Fed means the bond market has decided the Fed is behind the curve. Yields will keep rising. The stagflation trade intensifies. 4. Bitcoin reaction to the first 30 minutes. If Bitcoin holds above 73,500 after the announcement, regardless of what equities do, the institutional bid is confirmed. If BTC gets hit hard and closes a 4-hour candle below 71.5 on a hawkish Fed shock, that is the invalidation signal. So 4 things. That is the checklist at 2 p.m. Every single thing I showed you today, the coil springs, the volume comp state, the composite scores, the confluence scores, the VWAP deviations, I publish all of that in the pre-market brief every session on Substack. It goes out before the market opens. It starts with the regime read, because the most important decision you make is not which instrument to trade. It's what the macro environment you are operating in. The regime determines everything else. Then I move to the V13 scoreboard. Every asset I track from +3 to -3 is based on the volume structure reading, not my opinion, the institutional volume footprint. Then the instrument deep dive, the specific coil readings, the VWAP levels, the signal zones, the confidence scores. The same framework you just watched me apply to the Dow, the Russell, Bitcoin TLT. The IVT Terminal, the live dashboard version of this framework, is also available to members. You can pull it up this afternoon and watch the COIL readings update in real time as the Fed speaks. The link is in the description. The rate decision today does not matter. Everyone knows rates are on hold. What matters is the dot plot. What matters is whether the FOMC tells they still plan to cut twice this year, or whether the oil shock and the sticky inflation have forced them to revise that down to ones or zero. And while everyone watches for the headline number, the real information is already in the charts. US 30 is coiled, Russell coiled, oil coiled, TLT at a composite of -5, the weakest instrument in the framework. Bitcoin already fired its spring. It moved from 71.6 to 74.2, and the entire crypto complex is at the strongest possible score. The spring is loaded. The trigger is today at 2 p.m. You do not need to predict the direction. You need to watch the signals in the right order. Russell first, TLT second, Bitcoin third. That's the framework. That's how I'm reading it today. I'll have the full post-Fed read in tomorrow morning's Substack. The link is in the description. So if you like what you have seen today, hit the like button, subscribe to my channel. It really helps a lot. So have a great day. Trade safe. Bye-bye.